Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. My goal is to help you put your money where your mouth is and invest in great companies. If you are like me, you love food and you love investing. So, it only makes sense that you will love this channel too. In this video we will be exploring the portfolio changes that some of the best known super investors have made regarding their food, beverage, and restaurant holdings. We will look at the portfolios of super investors Warren Buffett, Michael Lindsell, Terry Smith, Glenn Welling, and Bill Ackman. Be sure to watch through the end of the video where I share my final thoughts on their portfolio moves. If you haven't already, make sure you subscribe to the channel and make sure you have the bell notification on. That way you get notifications every time I post a new video. Now, let's go ahead and jump right in. Cue the logo. Let's start with the GOAT, Warren Buffett and Berkshire Hathaway. With a portfolio value of nearly $350 billion, Buffett is essentially the best investor of all time. Looking at his portfolio, we see that he holds 6.9% in Coca-Cola and 3.3% in Kraft Heinz. Combined, these stocks comprise 10.2% of his portfolio. If we look at the activity for Coca-Cola, we see that he has not made any changes to this position in the last 10 years, though we see a steady decline in the percent of his portfolio Coca-Cola occupies. This is likely due to the growth of his other positions relative to Coca-Cola. Similarly, his position in Kraft Heinz has not changed since he started the position in 2015. For now, it seems as though Buffett is content to continue to receive dividends from his positions and is not looking to buy or sell anytime soon. He has famously stated that his desired holding period is forever and definitely put his money where his mouth is. Next is Michael Lindsell from Lindsell Train. Lindsell Train has a portfolio value of around $5.6 billion and has even less portfolio turnover than Warren Buffett. Looking at his portfolio, we see that he holds 23.7% in Mondelez, 11.2% in Pepsi, and 3.9% in Brown-Forman Corporation. Combined, these stocks comprise 38.8% of his portfolio. He is definitely putting his money where his mouth is. Diving into the specific stock activity, we see that he has been selling off his Mondelez position over the last few years, going from his largest position size of 33.6 million shares in 2019 to 18.3 million shares in the past quarter. Given that the percent allocation of Mondelez to his portfolio is around 25%, it looks like he has been buying and selling to maintain that allocation. For Pepsi, he started selling off his position during the highs of 2021, a very well-timed move. His selling has slowed in recent quarters, but he is certainly not adding to this position. For Brown-Forman, Lindsell has been holding around 2.9 million shares pretty steadily for the last year after building his position over decades. We obviously cannot read his mind here, but it seems that he is happy holding his position at this allocation. Now, let's look at Terry Smith's aptly named Fundsmith portfolio. Fundsmith has a portfolio value of around $23.8 billion and also has low portfolio turnover. Scrolling through his portfolio, we see that he holds 5.7% in McCormick, 5.2% in Pepsi, and 3.4% in Brown-Forman Corporation. Combined, these stocks comprise 14.3% of his portfolio. Looking at the specific stock activity, we see that Smith began building his McCormick position in 2018 and has not made new buys or sells following his sale in the market peak of 2021, reducing his position by about 18%. Similarly, Smith has been reducing his Pepsi position since selling into the market peak of 2021. He has reduced his Pepsi position by 36% since 2021 and appears to be continuing to trim his position. For his Brown-Forman Corp position, Smith seems to be treating it similarly to his McCormick position, selling at the 2021 market peak and holding his trimmed position. Next, let's review the portfolio of Engaged Capital's Glenn Welling. Welling runs a concentrated portfolio of 8 stocks with a market value of nearly $700 million and about 5 times the turnover of Berkshire Hathaway. He holds 20.1% in Shake Shack and 10% in Black Rifle Coffee Company. Combined, these stocks comprise 30.1% of his portfolio. Looking at the activity for Shake Shack, we see that he started the position in Q1 of 2023 and increased it by almost 9% in Q2. The other holding, Black Rifle Coffee, was acquired with Engaged Capital acting as the sponsor on a special purpose acquisition company or SPAC deal in Q1 of 2022. As a result, Welling received more than 16 million shares, promptly sold off 30% and has been holding the position since. However, the percent of his portfolio Black Rifle Coffee occupies has sharply declined, indicating a massive drop in the company's share price. Welling did sell completely out of Sunopta, a position that he first owned in 2015, sold, then repurchased in 2016. It looks like he averaged down into the pandemic and rode the inflationary wave to peak market prices in 2021. He then sold it off and closed the position in Q2 of Q2. I like the concentrated portfolio because it allows the manager to focus on a few select companies. While Shake Shack makes really tasty burgers, it still remains unprofitable. The similarly unprofitable Black Rifle Coffee does make his food portfolio seem more risky than I would like, but I am sure that the sponsor shares he received and trimmed for taking the SPAC public netted Welling a nice profit. Last, we have Bill Ackman of Pershing Square Capital Management. Ackman also runs a concentrated portfolio of 8 stocks with a market value of about $10.8 billion and about half the turnover of Engaged Capital. He holds 18.9% in Chipotle and 16.7% in Restaurant Brands International. Combined, these stocks comprise 35.6% of his portfolio. It is kind of amazing to see that his 2 largest positions are restaurant companies. Looking at the activity for Chipotle, we see that Ackman started his position in 2016 during the notorious outbreaks at the restaurant. This was a ridiculously well-timed entry that has yielded sizable gains for his portfolio. Began selling his position in 2017 only to buy as the market recovered from the pandemic. He has largely held the position steady since, trimming just 7% in the most recent quarter. Restaurant Brands International is an older position for Ackman, who first began buying in 2014. Similarly, he began selling his position in 2017 only to buy again as the market recovered from the pandemic. Though he has sold off his position over time, it seems he has taken a cue from Warren Buffett, his favorite investor, and continues to receive that fat juicy dividend every quarter. I think Bill Ackman is a very smart investor who finds compounding machines in predictable companies. His ownership of Chipotle and Restaurant Brands International illustrates this. His food portfolio is really good and should continue to catalyze above average returns going forward. So now that we have seen their portfolios, what can we learn from these super investors? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. While reviewing their portfolios, a couple of interesting things stood out for me. First, there were a couple stocks common across multiple portfolios. Both Pepsi and Brown-Forman Corp were found in Lindsell Train and Fundsmith. Both are growing, dividend-paying beverage companies. Pepsi, a company I have already reviewed on this channel, is an operationally strong conglomerate of outstanding well-known brands. Brown-Forman Corp looks to be equally as strong, and I am planning a stock analysis video. Next, super investors who trimmed positions seem to do so during the peak market of 2021. This shows me that researching and buying good companies is only part of what makes a savvy investor. If you are going to sell at the top of market. Otherwise, hold forever. Great timing, super investors. Last, super investors had large positions in either food and beverage companies or restaurants, but not both. While both of those industries are fundamentally different, I found that fact telling. Interestingly, the breakdown between food and beverage super investors versus restaurant super investors also seemed divided by age. The average age of food and beverage super investors was 75, while the average age of restaurant super investors was 55. All in all, reviewing the portfolio changes of the super investors was very insightful. Many thanks for watching. What are your thoughts on the super investor portfolios? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.